Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. We have Monday, we have our weekly Cycles TV. Welcome to this session. We will review an important market situation today. I know you are maybe waiting for a lot of different assets, but today we need to have a view on the long-term and short-term cycles because we have conflicting cycles in the global stock markets today. And this channel is about education on cycle analysis. Therefore, I want to discuss this situation about conflicting long-term and short-term cycles and how to deal with this situation from a cycle analysis perspective and how to read this current juncture, because cycles are not as easy just giving one direction. So therefore, we use current market data to discuss the status of cycles. Disclaimer, this is education only. We don't give any recommendation whatsoever. So please take care or consult your financial advisor for any decision you take out of this education. So therefore, the first 15 minutes, long-term cycles on the global stock markets, S&P 500, important situation. That's the key topic for today. Second topic at the end, for sure, I will pay a short attention to the crypto, Bitcoin assets. However, there's not a clear cycle indication, but I want to discuss the crypto market with you, as you know that this is an important asset class to discuss on cycles. That's it for today. So thanks for joining me. We are live today. So if you want to discuss special topics, at least at the end, I will pay attention to the chat section here on the channel, here or here, or here, wherever it is. And therefore, feel free to drop in your questions. Latest at the end, I will review the topics and try to answer all of your questions. That's the purpose of the live session. Okay, so let's get into the market, the global market situation. Therefore, we start with the long-term analysis, which is no important updates. So don't expect updates on the long-term cycle. But if you're new to this channel, this is the long-term perspective. So therefore, let's quickly go through the standard procedure we are using here for cycle analysis. We pull up the weekly S&P data set here, which is the current status. And finally, first topic is we have a look at the cycle spectrum, which is processed by the digital signal processing, which helps us to select the important cycles. The simple procedure is we look at the peaks in the spectrum with the highest amplitude, just to say it in simple words. And if there's a clear separation of a peak in the spectrum, then this is the important or dominant cycle we will use. In this case, it shows us a length of 186 weeks. The green triangle means it has a good Bartle score, so we have statistical significance that we can use this cycle. And the strength is also good. All the other cycles to the left and to the right have lower amplitude, which means we can ignore them for the first cycle analysis. On the right-hand side, you see the same list here of the cycles. So the cycle with the length of 186 shows up. If you ask yourself, what is the colored background here in the list setting, that's not the Bartle score. So here down below, the score of the triangle is the Bartle score. The background here behind the length is the current cycle phase. So this shows you quite at a glance where the cycle phase of the cycle with this given length is. And red means it's in a downward cycle phase. Green means it's in an upward cycle phase. And the beauty is you can hover at any given date on the chart and you will see that the background color automatically aligns. So this helps you quickly, like a time warp. So you can go back and forth in time and you will see how the cycle phase of these cycles changes. So you see here at this point in July last year, almost all of these cycles projected an upward situation, where at the current point in time, almost all long-term cycles, it even doesn't matter which cycle length we use, indicate a downwards current cycle phase. And you can even hover over into the future, at least if you select one. So you can hover over the future here, and you will see how these cycle phases change also in the future. So that's the simple reading, but we will go now with the most dominant cycle, 186 weeks. This is not new, so if you're following this channel for some longer time, I have indicated this weekly cycle already in October last year, and you see this cycle is at force, and I always often tell you it's working like a magnet on the markets. You see how price is pulled down exactly to the cycle in this indication. So it's really fascinating how this long-term cycle is really pulling prices down, which has surprised us all in the market for the first 3 months. That's nothing new. This is still intact, and it's a very beautiful long-term cycle which is in force right now. So this is the long-term perspective, as I always tell you to keep this in mind for any asset you want to look into. And this situation goes on into June next year. So I just repeat the situation, because if we now switch to the daily analysis, so that's always what you should do. So this is the daily S&P 500 here with today's data. We do the same procedure. We switch to the spectrum chart. We look for the most prominent peak in the spectrum, which here again, we have a clear separated peak in the spectrum with a length of 166 days. If you're following this channel, you know that this cycle is also by no surprise here. We have seen this cycle during the past weeks, but the point for today I want to make is, and first, if you look at the right-hand side of the face of all daily cycles, you see, even though the first view is all cycles, which could be detected in this data set, are pointing upwards in regards to their current phase. So from a daily cycle perspective, we are waiting for a rally, question mark, not a rally, question mark. That's exactly the point I want to discuss with you today, because just looking at the daily cycles, we would expect an upswing in the markets, just looking at the daily cycles. So, and that's anyhow what I outlined in different forecasts here. So that's the current daily cycle, which is still intact. So there's no deviation or there's no reason right now why the cycle is not active. I mean, we have really heavy swings here, but we still are in the downwards area of this cycle here. So that's the daily phase where a bottom can happen. And I think I mentioned this already. We had first short-term bottom here. And now the question is, do we have a second low here, which is, by the way, often the situation to serve on the left-hand side of this cycle, and on the right-hand side, there's the possibility that you see two lows, which are not exactly the same, which is a confirmation that we have this situation here. So that's the daily perspective, which reads as an upswing into June, maybe July. I mean, we need to be careful here around June, and also reassess here in regards to the possible topping period here. But that's in 4 weeks from now. What we are currently discussing here, and therefore we need now to be very careful here if this daily cycle will stop this very hard downswing, which we have seen since the end of this year, because at this point in time, or from here to here, we had an alignment of the long-term cycles. The long-term cycle was pointing down and the short-term cycle was pointing down, and we see the result in the markets here now. And we have a conflict for the next period into summer. Now the long-term cycle is still pointing down, while the daily cycle is now pointing up. So therefore, how do we read this? We don't know, and that's often important what I try to tell. We don't know which amplitude will overrule now one of these cycles, because the projections we are doing here are not predictions in regards to the price movements to the up or to the downside. So the relative force of the cycle, we don't know. We just know about the timing points. So at which point in time these cycles turn and will then unfold different forces to the markets. And that's now the unknown factor here in this setting. So if the long-term weekly cycle amplitude is stronger than the daily upturn cycle amplitude, which is maybe not as high as the weekly one, which means then that the markets will continue to move down. The downward projection will be just slowed down due to this upswing cycle here. So that's the first scenario which could happen. The second scenario could be that that this daily upswing cycle here until June, the amplitude is similar or equal to the current long-term downward cycle, which will then result in a sideways market, because both cycles will equal or phase out each other. So we will just see this sideways projection here. Or the third scenario might be that the daily cycle amplitude is higher in the upswing than the downward amplitude of the weekly cycle, which will then indicate a possible a bear market rally to the upside. So these are the three scenarios. So what we can outrule is we will not see higher highs. So the scenario that we will make another high here, this is more or less impossible, at least due to cycles. So there will be no new high in the markets for a very long time. But then now we have three scenarios which could be possible. So a short-term bounce in the markets, which might be very, very tough to trade due to the high volatile markets at these times. So I don't know. I think it's a high risk if you are betting on an upswing, because this is just one out of three scenarios. The second scenario is a sideways market in average. So or on average, for sure, there will be swings to the upside and the downside. But if you look back from summer to the last 4 to 6 weeks, it will then equal out in a sideways average market behavior. Or scenario 3, even this daily upswing is not as high as the weekly downswing cycles, which means we go on average slightly, we will continue to see lower cycles here in the markets. So that's now, and yeah, I'm sorry that it's not as clear as you might hope it could be, but that's the important point you need to keep in mind when doing this cycle analysis, because in today's time I often receive comments and questions. Okay, markets need to push up. Yes, but we have learned from the first quarter, so we know something. So we have now the first quarter in where this downwards cycle phase was in, and we learned that the amplitude of the long-term weekly cycle is very, very high. And so we know about that. I think it's very hard to overrule this very negative downward long-term cycle by a daily upswing cycle based on the behavior of the cycle since January. And Kachelgott, your comment is absolutely on time and on the point. So we could see a small rally, but this rally will be limited. It will be in a high volatile environment, and the long-term perspective is still downside until June 2023. And yes, maybe best case is we see a sideways market. I mean, it depends what you see in best case. So I think the most probable scenario will be a sideways market until June. So, and I don't know if on average we will see a slight upswing, so a small rally, or a small downwards projection. That's I think where you need to switch to your technical indicators on the technical chart to then really do some swing tradings based on technical oversold, overbought conditions, or you can just look out for the high probability setups when to expect the next downswing. So in general, it will be a risky environment now to bet on the upswing cycle. You need to have other measurements how to enter and exit, because based on cycles, I think the more chance you have is look out, or what I always told here, look out for, I think the period starts here. That's why I say somewhere in June. This is the point in time where the cycle rolls over again to the negative situation. And then we are in sync with the long-term cycle. So this is the point in time where I think you can position a very interesting short in the markets. Or if you're not trading on the short side, at least there's the next point where you need to close long positions, ensure that you have tight stops for any long position you have in the market, or you switch your risk management. So I think if you are from the daily market observation, longer term perspective, look out for June for the next downswing to happen. If you want to take the risk, look out for technical situations where you could see short rallies now in the markets. That's the key point. And I think, Kache, you asked the question and you comment on that. So therefore, I will just quickly switch over to a technical chart just to, again, repeat here what I very often do. Because I think you are aware of that you can use the cycle length to fine-tune technical indicators on your price chart. So therefore, every technical indicator needs a length setting. And if you know the dominant cycle, which is 160 something on the daily cycle, use an harmonic of the dominant cycle as input parameter for whatever technical indicator you're using. So I like a smoothed cyclic RSI, nothing special, open source, it's available, use whatever charting platform here. And now the technical condition I'm currently observing here, we can zoom in a little bit. So this still confirms there might be a rally ahead because first of all, we have this indicator below the lower band, which then triggers signal once the signal line crosses above the lower band. And we have an divergence here between our price. So we have a lower low, and here we have a higher low on the indicator between price and confirmation below the line. So this confirms the cyclic situation that we could see, maybe a short bounce in the market from a technical perspective. But as I said, what I'm positioning myself now or looking for is not because this is a high risk environment, as I told you already. I'm waiting for the indicator. Let me draw it on the chart. I'm waiting now for this indicator. We will move up here somehow. Yeah, and then I'm waiting for a turn here. So let's say this is then how we move forward. So I'm waiting exactly for this point in time here, because then we have confirmation from the indicator. Could also happen here with the timing point, as I said, somewhere in June. So I think this is the point in time where I want to see confirmation of a price and both long-term and short-term cycles. I think that's the point where you depends on your risk, but where we could expect then markets to turn. I don't know if we are able to trade the rally, because then you can add, it gets more and more complex, but for example, the technical indication is not as clear for me, because we see here, this is a momentum indicator here, also available here. And the momentum indicator shows a different situation. So from the momentum, we should go down, and the relative strength, we should go up. So we also have conflicting technical signals. So the cycle perspective is not as easy. Last but not least, let's conclude this situation here, because this is what I like to see here, the long-term, or before explaining this, this is the financial stress index, which is a long-term indicator provided by the Federal Reserve Bank of St. Louis, measuring financial stress in the financial markets. This also shows a long-term weekly cycle of around 190 weeks, so similar to the cycle in the weekly S&P. It needs to be read vice versa. I like the cycle also because the accuracy of tops and bottoms in the markets, I often show this cycle here, is very good. So I just do it very briefly here because you know about this. And for the last, for the last month, the financial stress is now slowly increasing, which is an indication that more and more stress coming into the financial markets, which is more into alignment with the long-term negative cycle. So the financial stress long-term perspective is confirming the long-term weekly cycle, and there's lots of room. So if you see the absolute level here, the financial stress is so low. I think the potential for another rally so that the financial stress index even comes down is very, very limited. Yeah, so be careful with any rally, even if the daily cycle shows up. But Juanita, hello. I see 40 at bottom arrival and 110 uptrend starting. Does it mean some temporary upward a little bit in the short term? I think you're referring to the S&P daily, right? Or just please give me an indication what you're looking. I think you're looking on the S&P. Juanita, please help me out in the chat section. I can then comment on that. 40. I don't have the 40 right now. 110 uptrend starting. But yes, I think, as I said, and what you see here on the right hand side, all cycles which are shown here on the right, doesn't matter if 40, 110, 60 or 53, all are colored in green, which is exactly what you are stating. So it means uptrend starting or bottom arrival. Both mean they switch now to a positive short-term projection. It's exactly the same what I discussed here. So yes, correct. Short-term, we see a temporary upward situation in the markets, correct. But, and that's the point I can't stress out often enough here, you need to be careful based on the long-term negative cycles which are still in play. Okay, so that's it for the global market situation, and I want to make you aware because lots are currently focusing on the daily cycles and just waiting for the next rally to start, which is has to be set into perspective. As I promised you also in the last session, we should have a short update on the crypto markets there, and therefore I want to have a short view to the assets in the crypto area. So therefore let's open Bitcoin daily chart. That's the current behavior in Bitcoin here. So I think we have now these. What's interesting here, I mean, I'm not a technical analyst here, so but we have these 3 lows here in 2021, 2 times, and we are now approaching similar price situation here, which but at least let's have a look at the cycles here. And if you are a long-term follower, you know that there's a 200-day nominal cycle always involved in almost all important upswings in the past. So therefore, I'm really looking for nominal cycles with lengths of 200. And if we have a look at the current cycle analysis, which we're doing here, we have now a spectrum which is not as nice for a cycle analyst. So this is not a good spectrum to work with, because from a mathematical point of view, yes, we have a top in the spectrum, we have a top here. So from a mathematical point of view, we can find peaks in the spectrum, but, and this is also a topic, therefore, from a learning perspective, it's a very flat plateau here in the spectrum. So where is the peak? Could be maybe here or here, question mark, question mark. So we should not overtrust the digital signal processing, which is indicating here. But as we have such a flat plateau here forming this peak, we don't really have enough confidence to use this kind of cycle. And if you have followed the cycles in Bitcoin for a longer time, you know that we had a peak somewhere here in the past, very often around this 200, so 180 to 220. So in this range here, that's where we had the peaks, which also indicated a low already, and I think in March when I talked the first time about it. But now you see this cycle is morphing, is transition into something different. That's also the situation we always need to take into account. Cycles never stay as static as it seems like. So if we make a snapshot, as we're doing here, this is a static situations, but these cycles never stay static, endless in the future. So therefore, this is now what happened to the Bitcoin cycle. The nominal cycle of 200, which was there for years, we discussed it here on the channel, seems to fade out, and the longer term cycle seems to take over, the shorter term cycle. However, we still don't know or are not sure what is maybe the longer term cycle, which might point here. So we are in kind of transition where the nominal cycle around 200 seems to be not as prominent as in the past, but there's no clear result now for a longer term cycle. You can now switch the in-sample period to shorter time frames to get a clue about maybe different cycles, but that's now a more complex cycle analysis routine. Now, I want to show you this first, because this is a very different picture as we have seen on the global markets, where we have a clear peak in the spectrum in the global markets. We don't have it in the Bitcoin charts. So therefore, that's why I always try to educate you, not just look at the table or the peak of the spectrum, which from a mathematical point of view are easy, but you won't see the flatness. So kind of, we should need a flatness score here. So we could now use the cycle with a length of 284 for sure, which as the cycle now extends, is still projecting this bottom here. And in regards to the past, it looks good. And David, as you mentioned in the chat, the last time it was 233. That's exactly what's happening. So we don't have a stable cycle result here. What's the difference with the weekly cycle on the 180 on the global markets and the cycle with a length of 160 something in the daily S&P? This is stable from week to week. Now the crypto cycles seem to fluctuate. Too heavy to get stable projections. So therefore, I can't give you a clear indication which cycles are now able to use, at least not in Bitcoin. So, and that's also, we need to take into account when cycles do not work, or when a cycle spectrum result should not be used for projection. Because David, I also think if we go back into the past, we will see, or we have seen clearer peaks here in this area. So, and this now flattens out more and more. So that's now for sure no clear cycle projections from the daily chart. You could switch now to a weekly chart on crypto and align different cycles there, but that's a little bit out of scope for today's session. So therefore, because you asked for it, I would not trust this cycle anymore. Interesting, just maybe to comment on that, there's also the cycle with the 110, which is maybe a second possible cycle here. It's a harmonic of the normal cycle of 200. The thing why I maybe would have a view at the 110-day cycle is because it's exactly the second harmonic of the 200-day nominal cycle. So therefore it could be important. So we still see normal cycle of 200 in their harmonic by a factor of 2. And this cycle is not so bad because the short-term swings are still valid in regards to this cycle. So as I said, we just count the important turns here. So if this is then the top and this is the low here, maybe this is the top here. Yeah, so this 100-day cycle is currently very good in explaining these interim fluctuations, at least then coming from here. So I like the harmonic cycle with a length of 110, which still is still a confirmation that the 200 nominal day cycle is there. But again, I would not trust this now too much. But at least if you choose both cycles here, I mean, but that's the story I show you here since January. No, to be honest, I'm here from a cycle analysis perspective. From January, I showed you that we should expect an upswing move here, which, I mean, we had a very small one, but then we had a larger downswing here. But now let's see if we have the second harmonic of the 200-day nominal cycle is now currently in force, which will then result in a very short upswing into the summer, which is also in confirmation with the longer term cycle. But that's now more completed. Okay, good. So that's at least it. The topic I wanted to update to you here. So let's now switch to some additional questions. So because that's also the reason for the live session here, so that you get a chance for sure to discuss some topics. Let me have a look at your questions. I think I tried to answer some of these topics. Matthias Berger, why June? That looks more like late July that the cycles are in phase again. Yeah, okay, let's switch, or let's have a view on that chart again. And I want to explain this topic with you. So here we are at this situation, and I think it was this cycle here. And I always talked about June, and you asked, or you said July. So let's make this a little bit larger here. So it's correct. This cycle here starts to turn in July. Yeah, if you look at the top and have a look, when does this daily cycle turn? It's July. The reason why I am highlighting June as window to start is that first, let me draw it here on the chart. I mean, we don't have just one point in time. I think that's the period, or that's the window. Yeah, I would call it. That's the window where this turn is expected. So, and I think this is somewhere in June here. So therefore, I would be careful here when we are approaching this point in time, as the cycles are not static and can switch a little bit. That's why I mentioned in June here. The second point why I think, at least at this point, we need to pay attention is that we often see a left translation or a skew of cycles in financial markets to the left, which means that due to the long-term cycle pointing down, that there's still a long-term downwards bias in the current markets. I don't expect the upswing to turn into the right-hand side of this cycle here, as the long-term cycles anyhow are pointing down. So these are the two reasons anyhow. So this is the window. The window starts in June. And second, we have the long-term cycle, which is still pointing downwards here. And that's where I would expect, at least in the left-hand arm here of this cycle, or in the topping area, to see the turn. And this period starts somewhere in June. Matthias, I think that's the reason why I use June in my explanations and not only July as single date. I hope this explains it a little bit. Okay, David, I think the Bitcoin cycle 233 I explained. Jim, please review fill missing days difference. So the question is, what's the configuration fill missing days? Yeah, so let's have a quick explanation about that. So what we're seeing here on the chart are trading days. So we just see days where we have a price indication. So stock market holidays, weekends are skipped here on the chart. So from the time axis, we don't have continuous time axis in regards to, we should also see on the time axis stock market holidays and weekends, as if we work under the assumptions that time cycles don't stop on weekends or stock market holidays, we should insert these days on the chart if we do our cycle analysis. And therefore, there is an option in the configuration panel, if you go to the options page, where you can adjust how to handle the situation as we only have the trading days. So if it's set to none, no pre-processing will be done to your data. But then you have two options. You could set this to calendar days, which means that also weekends will be filled. So it will fill all stock market holidays and weekends. Or you can set it just for weekdays so that it only fills Monday to Friday and still leaves out the weekend. So if there are just single days missing for stock market holidays, the weekdays period will set this. So for example, if I switch to calendar days, you will see that now the time axis has extended and it will fill the chart on these weekends with the previous close. So therefore, for sure, the cycle length is updated. And you see here, it switches then to different lengths here if we use full calendar day cycles. But this now depends on the cycle analyst perspective. So your perspective from a cycle analysis point of view, how you approach these sets. So there are different reasons. So Jim, your question, what setting of 3 possible do you choose to start like? So I like to start with the market data, with the raw market data. So in the first run, I don't adjust the cycles. I just use the trading data as we have data. That's the first thing. But that's then the additional confirmation. I check if for example here, if we have the projection from the 166-day cycle, I just then show where the next important window is. It's here, end of June, starts end of June, and then over the period of July. Now we can switch to, I then use calendar days as second analysis. So I just want to have continuous time axis. I use calendar days, I just update. And then I check the spectrum again. So now these are 240 days cycle. Which is now calendar days. And now this is giving me a different projection. So which there's still also not as clear as possible. But okay, the 178, it's here. but the statistical significance is not as high. So what I want to see to have more valid cycle analysis, if I now see that the calendar day cycle, which will have for sure a different length, give me the same window in the time in regards to the next expected turning point. If this is the case, then you have additional confirmation about the cycle analysis. So, but here on the daily cycles, it's a little bit different. So what I said, the daily cycles are not speaking a clear language right now. Jim, I hope this explains a little bit how to handle that and which one to use. Okay, another question. What does the dominant cycle tell me versus the spectrum peaks? GameStop question you have. That's another very valid question. So the dominant cycle is the cycle which is highlighted here. In general, it's not a difference. So the first thing is you might see, why do I see the 83 days here, but the 83 does not show up in the spectrum? So first, therefore, we need to adjust the setting and make the scanner configuration exactly the same as we do the Explorer settings. So the scanner uses special settings in regards to the range. So it's looking for the full range, while the Cycle Explorer setting configure the outcome of the dominant cycle. And you see if the switch from the left to the right. So the cycle scanner allows almost everything from 50 to 400 and a Bartlett's limits of 10, while the dominant cycle starts at 30, moves to 300 instead of 400, and the Bartlett's score is higher. So there's also already a filter in that. So if we adjust that and now also use a different method, which is called dynamic in-sample range and full sample in range. The cycle scanner in standard uses always the full in-sample range. So if we want to see the exact same settings, we need to also set this to full sample range here. So that's now, let's check this. So we have the Bartlett's limit. We have the cycle scanner, which 30. So if we ensure that both settings are the same, so what I now tried to repeat, so just a quick addition. So now the settings for the scanner are the same as for the Explorer here and full sample range. So now the method the scanner and the Explorer uses are exactly set to the same configuration. So, and now the simple reading is the cycle, which is on top of the list here on the right hand side. So the cycle in the spectrum with the highest strength value is the most dominant cycle. So that's just the reason. So the dominant cycle is just picking the top of the cycle from the spectrum. However, the configuration, the standard configuration for the Explorer is different. So now you might ask, why don't you, as a default, set it to the same parameter? That's a valid question, but from an advanced perspective, we use the dynamic in-sample range, which means, for example, if a cycle with a length of 49 days is detected by the scanner, the dynamic in-sample range means now, in regards to the cycle phase and the cycle strength, we don't need to check all thousands bars of the in-sample data. We just need to use the last 3 repetitions of the data to see the current state of this cycle. So the Explorer is more focusing on the current behavior of this cycle in the current past and not in the overall in-sample period. So therefore the Cycle Explorer is more fitted from the parameters to address the current action in the markets, while the Cycle Scanner from the default configuration is for sure using the full in-sample range. That's the reason why the dominant cycle in the default configuration might show a little bit different. But in general, that's the reading what is the dominant cycle. I hope this answers your question, GameStop. Dale, would it be possible to design a chart that shows the daily and weekly cycle on the same chart? Yeah, sure. That's what we're working on, so that you can overlay also weekly cycles or completely different cycles from other data sets. So we have started with this procedure already, so that you can save cycles from other charts and then pull it up again on different charts. It's just not released finally, but it will show up a day, sure. Matthias, thank you for your explanation. You're welcome. So I hope you see that's exactly the reasoning why I would like to see you here overall as community on this channel, because there I can start to dig into more details of cycle analysis. Yeah, David, does the cycle swing indicator give you cycles on the fly? Yeah, the cycle swing indicator I showed on TradingView, which is free. So it's just the momentum. So it's not giving cycles on the fly. It's just adjusting the standard momentum technical indicator perspective with some cycle length perspective, which is automatically calculated. So it's more adjusting the current market momentum to the cycles, but it's not giving cycles on the fly. David, that's the short answer without going too much into the details. Okay, yeah, so we are running for 45 minutes, standard procedure as every week. Thank you very much for joining this live session and your questions from the community. I really like doing this live session with you so that we can learn more on cycle analysis. And I think today's session, I wanted to outline cycles are not as easy as it sometimes shows up on the chart. Daily cycle showing an upward projection. Cycle analysis is a more complex way of analyzing markets. I hope today's video gave you some insights on that. So I would like to see you next week, same time, same place. We will pay attention to what happens in the markets. So that's the reason why I'm picking what's currently happening in the markets to use the current data set to explain something. I think that's the best to learn something as community. So stay safe, have a nice week, and see you again next week. Bye.